Hello, traders. Welcome to the market dashboard. This is the overall market sentiment raw data published by Wall Street itself. So, we are going to go over a quick review of these indicators. It's pretty straightforward. Let's look at the left side first and the impact of that on S&P. Once these indicators reach extreme, for example, on the left top side right here, once this reaches level of 400 to 500, we are expecting potential market turn. Gets down to very low level, less than 10, we are expecting another market turn on the other side. These are not oscillators for short-term trading. This is going to give you the overall market bias where the market sentiment is, and when the sentiment is going to be over, 99% of people do not understand this one thing which can keep them on the right side. Now these sentiment indicators can last for a very long time. So based on that idea, and also when we reach these 2000 levels on the middle one and around 2000 level on the bottom one, around 1800 or so. So we know that, hey, we should try to hedge our positions or take a bias in the wrong side of the prevailing trend. That means the opposite side of the prevailing trend. So this is how you can work on now and in the future how to protect yourself, because this is never going to change. So you can see here of the recent activities, we reached these highest levels between 400 to 500 starting in October. This is where Blackstone came and say, hey, we should be having correction by March. So they were short $1 billion right here. And we can see ourselves as well why. Now, if you go and locate this area, now again, as I said, it's not an indicator where you just buy and sell, because you can be in this state for quite a few months. So let's figure out at this point where we were. As you can see, as I just told you, you could be in this state for a while. For almost 2 months. So what that basically means, market is going to be pretty much stopping pretty soon. We shorted somewhere here, took a heat for a month, but that was expected because that's how it goes. So you can see there's a clear indication without any expertise required that this is where we are heading south. And this is what these experts are aware of, and then they tell you what's going on and why. A simple indicator gets you on TV. And on this side as well, you can see it was reaching the top 2000, and this one also. So there was all markets. This is all the markets were reaching their top side. And we had a nice little drop perfectly captured. I also said when it gets down to close to between 0 and 10, we should see the other side of the trend take over. You can just see right here. This is what gets you in Wall Street to be a hero and on TV. You, they're on trade every day, right? But this is hourly chart on the right side. You can just see and that we are able to capture tops and bottoms. Where are we now? Based on this indicator, you're not all the way up yet. So you can see there's a difference of this between two heights. This difference has to be traveled. See that? It will bring us back to the shorting territory. So it has to push up big time. It should rotate and push up on the big side. So this is how we can pick your direction. I just added this moving average just to keep an eye on that. It's easy for you to take care of things then that way. So when it goes above this, you can look at long bias, take longs only, goes below, take shorts only, get shorts only, right? Not complicated. You don't have to pay people $10,000-$20,000 for the basic indicator. This is going to give you the overall market bias. All right. Now let's try to get this guy here shorter term. Here, when this indicators on the bottom three gets up to 80 to 90% range, again same thing, they might stay there for a while, months, but at least you know they should not be buying the top. And also, while this is going on, it's going from 28, well, this is S&P, when this is going on, while this is going on, right? It's at 40%, it'll go to 80% and come down, 80, 90% and come down. It's a rotational index. This is how rotations are taken on the Wall Street. So you can just see here, rules are like 20 to 80 range in all these indicators across the market. And as you can see, as the market was going down, it was going down and it stayed there for a while. This is the gauge of 8,000 stocks, how they're collectively performing. On the top is just ADD indicator, just to time it. Once we know the direction you want to go, we can just time things basically based on these dips. But you need to first know the direction you're trying to go, right? All right. So on the bottom is what we call as dollar denominalized index, the red oscillator. Once we know the direction on the bigger one is going to be up and we want to take longs only on this oscillator, all the dips you take. So this is part of GANN's rule 3, plan your way to profits, right? You have to plan the overall game plan. This one gives you the overall game plan of the market. So here, when this goes, you can just draw the line here, same thing. When we are into this zone, we're gonna look for longs and see how we can position ourselves with options. So this is where, let's see, market was, now we were talking about market should go down. So right here is on the top side, goes to +2, -2. You can see it was on the shorting location, and within a week, 10 days, you got paid nicely on this one. Since I want to take shorts, reaching that 80 level, Same thing here. This one did not do much. Then the next one came in here. I got the top clarified for you right there. And we got paid. When market was going down, it rallied a little bit. And you can just see this guy told us to short again, precisely the top. Now the market is going to be shifting up, right? Once you got that. So you need to shift your sentiment to on the long side. You can just see this one dipped over. On this side, you can just say, hey, this is the area I want to go long. Now, this is where the panic was setting in, right? Very badly. Now, this is overall bias meter. So, again, this is how you get a huge level sentiment, then mid level sentiment, and then we will go down to one more level sentiment. Now, again, this is the dip. You can see dip, you can just see, and one more dip you can see. So, this dip was little challenging, but market was still, bottoming. So, crashing, bottoming, so it takes a while. But you can see it is telling you that how to enter in the direction. So this is how you need to plan your entries. Now we go to the trigger chart, which I call trigger chart. Same thing. This is same but on a different frequency, right? So you can just see here. This is on the bottom using RSI. So this is when the trends are really taking off. You want to buy the dips. So watch here. I'll be looking at the buy the dip here, buy the dip here, buy the dip here, buy the dip here, right? Buy the dip here. So it's giving us the ideas of going long or short. Here on this time frame, this guy again went up pretty high, 86, right? 93. So what is the expectation here? There should be, we can take some shots also along the way. So you can take a little shot here. It's a $10 move, 100 points in S&P right here, small blip like this. When it goes up again, you can take a shot again. See on the left side, it is hitting the 90 level. Take a shot again against the trend. And then right here again, take a shot. See that? So all these, when the indicators go to the extreme, this is where you want to act. Even against the trend, you can take some trades. So you got some good when this indicator has maxed out its value. 10 points, 10, 20 points. This is also, let's say 10 points against the trend. We have to be at 90 level, 80, 90 level right here again, boom. So whenever this indicator was on the top side, you were able to plan your short side as well. There's no oscillator, there's no sentiment, there's no stock. This is just the overall market, how it is behaving, right? So on the bottom, in this one, it got it nicely as well. Same thing. So if you go back, right here, when it went down to the low levels, got you long here as well. And you hold it until it gets to at least on the top side, 70 to 90. If it goes to 80 to 90, you're looking for shorts as well. So you can see that with this planning is required upfront to make these kind of profits. So this is what is happening. This is happening just right now. We just took a dive again here because of this. Nothing else. Not Corona, not anything else. Now we have another chart. That's why we had four charts. So Now you saw long term, mid term, and this is like, very fast term. Now this behaves more like an oscillator situation, right? When this is on the top side, around 80 to 90, look at the oscillator go short. Here go short. Here go short. Here go short, right? So at these levels, now this is the rotation within the bigger cycles. Go long, 20 to 80 range. Go long. You can go long. Go long. See that? So once we see this chart, now you can see how it is picking up the longer cycle, shorter cycles, and picking up the entries nicely. No indicator was used besides the raw data, and we just use one RSI. Nothing else. So now what's going on here? After this is once we know the direction we want to go, then we go to our scanners and see which stocks we should be shorting. And this is where we can overall market map and then followed by the scanners. So for example, you can use this scanner on the hourly chart. And let's say you wanted to take a long and short, we have this high-low scan. So if you wanted to go long or short, now this also plots square root levels dynamically generated by the market itself. So let's have one of this come up. So there we go. Let's say based on our indicator that we will want to go short around this time frame 6-9, there's a short coming and you want to trade the short stocks at this time, but right now 619 is we have to find something. So when you are in that window, when you do the scan, it will give you the levels. It will scan all. This is S&P scanner, which will scan the data, and it will tell you at that moment that what is the perfect list of stocks you can short. So this is the 19th. Obviously, you can see this on the bottom, high low. It is at a high level, and you want to, and also this is also at a high level right here, 16, 20. So when you think that this is the time for going short, so you look at the oscillators here. When they all match up, this guy on the top, this is actually the volume oscillator we have built. So now the beauty of this is a simple two-line moving average crossover are taking place, and you want to short something, and this is going to be your stop loss. So when market opens here, it goes very fast. There's a rules of doing this. This one is ready to go short. This is ready to go short. So these are your perfect GANN square root levels as well. So we can short here. This is short was triggered here. You can take early short, 25% position right there. Other option is wait for this trend oscillator to flip over and then wait for the pullback. Stop loss is here. One line. These are the lines where you can stop loss yourself. And it went down $10 for options. If you have vertical spreads, you can do vertical credit spreads on the puts. You'll be in money right away. So this is how you need to have a bigger picture huge cycles, mid cycles, then you can do trigger point entries on the market itself, and then you can say, okay, I am ready to take shots, and this will give you the selected stocks we can short on the hourly level, intraday level. All right. So I hope this helps to plan your way to the profit. GAN rule number 3, and this is how we are applying it, and hopefully you enjoy it. Thank you.